Right, microphone check, testing 1 2. Thanks for your patience. This is the Nightly Strategy Podcast for July 11th, 2022. We'll start with market health check. All right, so we are still in this, riding this little wave right here, this Kata 2 style of a wave. Today the market gapped down slightly, got to the spine of the dragon and held, so it was a very small range day. But when you add that with the gap, the net was twice the range for a little over 1% sell-off. The short-term momentum tipped to the downside, but it did not come through the dragon. But the dragon has started to stall. So this is a perfect critical state right here, where it's got to decide, is this going to go test the Bollinger Band mean and get up to Z1, or is it going to break through the skin of the dragon, test Z minus 1, the RL30, which has just started to roll up, and come down and hit the PSAR tomorrow? What's it going to do? I don't know, but it's a small range, and we have a large payoff in either direction, so that's perfect for short-term trading. The uncertainty of this moment is ideal for patient, relaxed traders, so that's what we want to be tomorrow. I note that we are still in the spring, and that the slope of the RL10 is still up, even though there was a bit of a stall today on the short-term momentum. That's exactly what you would expect if this is going to continue to the upside. So that's the risk right there. It's not until it breaks below 374 that we have confirmation of a downward move on the daily chart. Now, is it possible to trade the short side inside this region? Yes. Is it better on an hour, 30-minute, or 10-minute bar? Yes. But there's clearly 1, 2, 3 of these ranges down to the test. So perfect critical state, a slow-moving spring thaw, and we'll see if this is actual or just a hint. They all look the same leaving the river. Here's today's performances by sector. Let me shrink that down a little bit. There we go. So today the S&P gave us minus 1.14. The Dow was better at 0.56. The only thing on the positive side of the ledger was treasuries at 1.72. Underperformers were all the speculative indexes. The Russell down 2%, tech down 2.14, emerging markets 2.67. The only things better by sector today than the market were energy and finance, which didn't lose quite as much, 0.9 and 0.8. Food only down 0.6. Simon Property Group, oil, materials, real estate, blended commodities, consumer staples between 0.5 and minus 0.14. And then on the positive side of the ledger, again, only the VIX 1% and treasuries 1.7. So not much to choose from to the upside, but it's all conservative measures. What was better than the S&P today? Or worse, I should say. look and see. So again, we have the S&P here at minus 1.14. The sectors that were worse, the first stack, wheat and precious metals, oil exploration, the Aussie dollar, tech, lumber, the other lumber, and Mexico between minus 1.2 and minus 1.7. The next cluster, consumer discretionary, marijuana, Brazil, PayPal, um, S&P biotech, blockchain, and the FANGs between 2.7 and 4.5. Next set, ARC Genomics and lithium, minus 5%. The blended large cap crypto, clean energy, Bitcoin futures, global future of finance, and ARC innovation between 7% and 5%. Individual companies that suffered today, all the financial disruptors. Coinbase, 10.5%. Ethereum, Robinhood, Tesla and Rivian in a special beat down. It's down 6.5%. Squarespace, 5.6%. Alcoa, 4.7%. Cliff, 2.4%. Devon Energy, 2.2%. Apple, 1.5%. Microsoft, even worse than the S&P. So plenty of things to be in despair about. I noticed Tesla has worked its way back to the key price level around 700. That's been the pivot point, in Tesla has been 700. It's run up as far as 750 and as far down as 650. So it's given us that 100-point range between those two with a range stat of about $52 and an R10 of 5.25 for our bellwether. So lots of things to be on the lookout for underperformance tomorrow. All right, shifting to the daily report, we'll go to I guess first things first, we'll do sniper trade of the day. So this is in Cliffs Natural Resources. The metals have been especially underperforming, and today started off with a gap down from the close last week to today's open. It monkeyed around here, held support until it gave me an SSC to the upside. So I take the SSC at the break of the PSAR. Here's my standard risk box of 20 cents in Cliff. There's 20 cents. I'm going to use the RL10 belly as my actual execution. So if that's how much of the standard risk box I'm actually risking. It moves out in my favor. Second leg up, rolls over. There it crosses the baby dragon. I take a 1, 2, 3. Exit would have been here. I took it at the edge of the dragon. So on this much risk, we get about 1.25, so maybe 1.3. I get the PSAR flip here. There's the standard risk box. It moves in my favor. Here's the crosses the baby dragon. I exit when it touches the skin of the dragon. So on this risk, we make about 1R. So net about 2.3. Standard practice. Target selection, Cliff, 3 minutes, simplified indicators, watching the seasonality. This move here was accompanied by a surge. This is where that whole thing rolls over and starts to decay. Here's where it breaks that lower boundary for the short. Here's where that thing runs out of steam to the short side and starts to hook back up. Standard practice, standard work. All right, dashboard number 1. Still in bearish normal. Don't forget that. It moved from here all the way back down to oversold on the 2-day. Risk Z is reminding us there still is potential for this upside. This is not panic selling yet, but it is vulnerable to like a COTA 2 to the downside. So if this rolls down, it could be one of these moves. So that's what bearish normal is all about. The max pains, or the min pains, I should say, McDonald's, Walmart, Verizon, Procter, and Home Depot, those are all the staples that are working. Here's the things that are not working. Alcoa, Walgreens, Caterpillar, ExxonMobil, Tesla. Pretty good place to start for target selection. Lots of dojis today. That's not surprising given how small the market range was, which means it's not surprising that we see a lot of auto framers. I like the 551W in Johnson & Johnson and the fact that it's 2.7 to 1. So Johnson & Johnson is an interesting frame. Why do I like the 551W? It's a swing pattern, which says that if you go back 5 weeks, if this is today's price, and you go back 5 weeks, today's price is higher than it was 5 weeks ago. If you go back 5 days, today's price was less. So there has been a bit of a pullback. And then today was 1 day up, meaning that the open was lower than the close. So it's a white candle. It's 1 day of positive intraday momentum. And then on the Williams percent R, we are below the 50-yard line when testing the 10-day high. So the idea of the 551W is that there is favorable conditions for a move back to the 10-day high on a symbol that is relatively strong over the intermediate term, 5 weeks, has had a bit of a tactical pullback, but which has started 1 day of recovery. So we are essentially aiming to capture the 2nd-day momentum as it is going to go up and hopefully test a 10-day high. That is the hypothesis of the 551 signal. So this signal generator alerts me to the possibility of a 1-day trade where if that thing breaks out above today's high, it could be a start of that move that I could capitalize on intraday. So Johnson & Johnson is of interest. In the ETFs, significant number of dojis. Lots of auto framers. Oil exploration 3.5 to 1. Materials 3.4 to 1. Brazil 3 to 1. All of the globals here 4 to 1. So that tells you how bad that has been. Boy, gold is just getting murdered here. Bad on every time frame. Today's small range means it's not a surprise that there's a lot of auto framers where the risk to reward is better than 2 to 1. The ones near the top are the ones that have suffered the most from their 10-day high. Things that stand out from, look at all of the international indexes there. Asia less Japan, Europe, Euro-Asia blend, emerging markets, Latin America, Brazil. All of those much worse until you get to the first one in the U.S., the mid caps and the small caps and the S&P. So the U.S. is relatively better shape than the globals. I'm always going to be interested in ExxonMobil, the energy sector, Alcoa, Brazil, Frog Champion, U.S. Steel. Yeah. Lots to pick from there. Buyer's market. Same with the daily squeezes. A large number of symbols had compressed ranges today. The S&P, the Dow, and mid caps. That tells you how compressed today was. There's Alcoa, Microsoft, my standard traders there, Tech, U.S. Steel. I like the ones that are most compressed. The sniper sets. Lots of Godzilla setting up on today's weakness. Twitter especially got smashed on a 5-day volatility and a 1-day. It's the only non-stealthy Godzilla in the whole stack at 1.37. So that is like triple star alert on Twitter. But else like Caterpillar, General Motors, Disney. Inside our tactical symbol set, there's Alcoa, Latin America, lumber, Cliff. Plenty of the usual suspects to work on. A good number of fireworks. There's General Mills, Eli Lilly, Clorox with a large 5-day range. But all these are pretty stealthy in here. Quiet little 1-day ranges. The fence sitters, these are the ones that are in the middle of their weekly and daily. All very stealthy over the last 5 days and today. I'll let you search through the quiets and the volatiles based on the 5-day ranges for those of you doing your own hunting. We've seen that already. Here's our tactical symbol set based on the sniper stats, sorted by descending volatility Z-score on the 5-day. Starting to get more symbols back in the winter on that failure to follow through. Still a few things postured to work. Apple and Coke, United Health, Walmart and Merck. Healthcare, consumer staples. That's where the strength in the S&P is right now, the defensive plays. You can see the pervasive weakness starting to sneak back in on the short term today. Very few things had any strength. Treasuries, oil, and utilities, all the defenders. Then things that didn't quite suffer as much, there it is, staples and healthcare. And then inside healthcare, look at Merck. That is it's screaming for attention. We're going to see my trade on that one today here shortly. That stands out like a sore thumb. All right, some sniper trades. I think, yeah, we already saw this one in Cliff, so just to review. It's in a Godzilla state. Dragon declining. SSC, standard risk. Rolls over, touches the dragon, standard exit. Standard PSAR flip and short with a standard risk box. Standard exit at the skin of the dragon. Clean energy. It's been especially weak in this weakness in energy. This has been especially weak. Big gap down, violates the opening range 3, short with a standard risk box. Standard exit crossing the dragon PSAR. That's a stop and reverse with an SSC with a standard risk. That's a quick loss, not so quick. So nets out favorably. Next one, Win. This is the Las Vegas gambling casinos. Big gap down, violates the OR3. I'm short. Quick 1 hour loss. Makes a new low of the day. Standard short with a standard risk. Exit at the PSAR flip. Re-enter short on a collapsing dragon. Quick exit for a micro loss and then an SSC reversal. Standard risk on the downside. That's why Win is so interesting. Look at that PSAR trend. Standard exit at the PSAR. So what's that one, if we were going to count that one? I should use that for the sniper trade of the day. So this is -1. This one exits here. This one's +1. So we've scratched. This one is -0.3. This one is 1, 2, 3, 4, +4, -0.3, 3.7. Tesla 3 minutes. Failing, bottoms out. I front run the PSAR flip with a standard risk. should be, if this fails, I should be getting short approximately there. If I use the bottom of the dragon, I would be getting short there. Um, Exit at about -1. It reverses, gives me a SSC. I take the long. I lose again. I take the short, finally. I get it. So there's the exit. So that's about 1, 2, +3. This is -1. That's minus 0.2. So that's 1.8. SSC, standard risk. Standard exit at the PSAR flip. That's 1.5, so we're now at 3.3. Short. That's about +1. $4.3. Missed the short. But it's getting late. It's late in the day anyway, so 4.3 in Tesla. Twitter, 3 minutes. We said last night this thing was going to drop like a rock. It was a big gap down. There's the collapse through the PSAR. Standard risk. Standard exit. +1. Gave back. I can't really avoid that. Entered short again on a COTA 2. Scratch. Stop and reverse long. Scratch. Short on the collapsing dragon. +2. Scratch, scratch. +3 on Twitter. Merck. Boy, this was a screaming divergence all day. SSC. +3. Short, scratch. SSC, or actually COTA 2, I should say. Scratch. Missed the collapsing dragon twice. Ugh. +3. Sniper trades of the day. Bill asked me to look at his Twitter and Tesla trades. So we'll take a look at those real quick. Let's see, Tesla and Twitter. Yeah, that's about. That looks just about. Well, about the same number. I think you did a little better than me on this one. So on this already short, 1, 2, 3, cash. Short 1, short 2, gave back enough to make the whole thing a scratch. Tried long, quick fail. Tried 1 long, 2 long, netted 1. PSAR flip below the dragon, gets 1. Finally makes bank on the big one. Some grinding, but still 4.4 for the day. Pretty nice work. More of that coming tomorrow. Out traded me on Tesla. PSAR flip box. There was a possible second entry. Got the second entry here. I think you stuck around too long on that one. I think maybe that's where you should be out. That's a good long. That's a good re-entry. Great short on the PSAR flip and the COTA 2 for 5.5. So that's about 10 on the day for Bill. Target selection. PSAR flip. There's the perfect short. That's a good entry. Got paid. I think this was late. I think you want to be here. I think your exit should be in here at the somewhere in here at the skin of the dragon instead of up in here. This is a good long. I don't want to lose money when it's that far in my favor. I don't like losing money on it. That's a good effort. That's a good exit. This one again, we had all of this in our favor, and we let it go negative. That's a good long shot. This thing started failing immediately. Get out. Good short. Good exit. This one, I feel like we should be short here, and there's no way we can accept that. Come on, now we're this far, and we let it go a full -1. And then as soon as that fails again, you can be short here. And then that will pay you, and we let that go -1. You get way too much belief in this thing. Luke escapes with his life on this one. Ooh, is this going to look ugly? PSAR flip, got paid, stayed out of the chop. Excellent short. And then, let's see. Quick loss. Should on 5 minutes, it feels like that's a lot to give back on too. But keep firing, keep firing. Just some bad timing in here. The kryptonite. But still, you escaped with your skin. That's just what today was. Lather, rinse, repeat. If that's your worst day, then that's a good day. All right, so at some point we were this far. Okay, so we got paid. I like this. Maybe we can scratch. Still, that's not too bad. This one, we shouldn't let that one be a worse loss than this one. We should have less confidence in this than we did here, especially when this rolls over at a lower price level than here. We got to do better on that. This stop and reverse should be here because now you have a COT of 2. Still pretty good. Gave back too much. The re-entry should be here, not here. We gave back 2/3 of the move. Stay out of the meetings. Ignore your work. Good scratch. With a little bit more attention to detail, this gets to be +2 instead of -0.7. So just some grinding today. Good stuff on Tesla. You got what was available. Study my brothers on that one. Oh, I'm sorry. That was Alcoa. Tesla. Yeah, that was that kind of day Tesla had today. Everybody that traded it was around 4. That's good work. All right, this is Pan. I like the PSAR flip short. Good micro loss. Gets the breakdown out of the sideways quiet channel. Gets paid. Quick scratch. Got paid. Yes. Don't be scared. Trade with a smaller position size. Handle the snakes. But good recovery. Got paid. Good short. Got paid. Got paid. Got paid. Good exit. 1.4. This would be about +3 if you take the trade. So that's exactly correct. Do that every time. This is more important than getting that trade. If the time, will, pattern, and money, if the will's not there, don't trade. But I want you to think about it this way. Who is afraid of being wrong? And what do you mean by being wrong? You mean being wrong because you followed the rules that over large numbers of trades works? Fear's not the right emotional response to that, or not the ultimate response that you want. I mean, you're going to feel what you're going to feel. In my view, not taking the trade is being wrong, and I'm afraid of being wrong by not taking the trade. So which fear is larger? Let those two fears cancel each other out, because you got fear on both sides of the ledger. Fear of being in and it loses money. Fear of not being in and it doesn't gain money because you missed the opportunity. Those two fears cancel each other out. And there's uncertainty, but uncertainty is a different word than fear. Listen to them. They sound different. Fear, uncertainty. It's two different words. And you got to be able to live with both of them. Both of them are positive energy generators to do the right thing. But that energy's got to be harnessed into rule sets. There's exactly nothing different about this trade than there was about these other trades, except that this one already had all of that momentum behind it, and it was failing in front of our eyes. That's the one to be least worried about. Just got to learn to look at it in those lights. Now, Tim, this is not the time to be expanding your span of control. And in your emotional state, I am sensing some adjectives. I want you to study the owl meditation, and I want you to do the owl meditation before you take another trade, and I want you to record the results and debrief us on that. That's the next report that I want to see, is the after action review or your little journal write up on the owl meditation to clear the emotional deck. So now you've had a chance to experience uh, early success, developing skill, a few setbacks, some responses to the setbacks, and now some creeping negative energy and emotion into your trade. So you're going through a normal sine wave of emotional response. So I want you to do the owl meditation and see what that does for you. And uh, uh, it's in the foundations course. Send me an email if you can't find it, and I want you to do that tomorrow. What I'm going to say is now is not the time to be expanding your span of control, because there are clear trades on this one that were not taken. And the one I want to just highlight is this one. First of all, this is the perfect place to be short, and there's the move. And we got out of it immediately because you wanted to get paid somehow, and that's the opportunity that we missed. This one, at entering at the high of the day, that's fine, but you can't let it go all the way down through the confirmation of the 100% confirmation of failure. That thing either works right away or it doesn't work at all. And span of control is just a reason to not get out of that thing earlier. So I would rather see you trading one symbol correctly than trying to see if maybe magically adding more complexity will improve the situation. It will not. And then that's the one, that's an emotional response to this loss. This, you stayed around too long in this one, and then that drove you to take the early exit. And then that one makes today a winning trade. And just that little difference multiplied by 10 days in a row would have an impact on your emotional state the way you're feeling now. So you got to disconnect the emotional state from the performance of the job. There's a job to do. We got to do that job. I want you to do the owl meditation, and I also want you to go back to your earliest series of trades and feel what it's like when you had a more relaxed hand on the reins. I also think I want you to get rid of the RL30 on this one in order to simplify your chart even a little further, and then lighten up the coloring on the dragon. I think it's almost too bold right now, and we're missing some of the moves. Let's see. Yeah, that's what I want to say on that one. All right, let's look at this one. So the other one, the span of control, cost you this trade, which you would normally take. And that one would give you 1, 2, 3, 4, and that's the difference in the day. So just those two trades that I've highlighted made the difference on the day. So do the owl meditation, stay with one symbol. I'm still not persuaded that this is the right one for you to be trading at this time of day, because you're not getting the kinds of moves that favors our trading. We want to find the movers. The S&P is not moving in your time frame. The Aussie dollar is, Brazil is, oil is. Target selection matters. I'm not persuaded this is the right time of day for you to be trading that symbol. All right, that's everything we got for today.
Hey, Ken,
Yep.
there was a request out there. If you could show us again how to set up the blue boxes that stay on the charts.
The blue boxes that stay on the
Yeah,
charts.
the like the trading range, the 5 day, 10 day, 30 day, because we can set them up, but I don't know how to get them to appear on every chart and then to like uh update
Yeah.
on the chart. I still I can't explain it. So if you could help us out with that, that would be great. Thank
All
you.
right. All right. TC2000. I'm going to come over here and find the range box. That's this one. Price range. I'm going to pick what just so I want that range. So I'm going to edit that box. Um, I'm going to make the black and the fill I'm going to make red so you can just see it a little more easily. Apply to all symbols. Click. Done. Then that box for that start point to end point and with the appropriate highest high and lowest low will self draw and automatically appear on all the symbols. So that one was in the S&P. So if I go to new core steel, there's that same box, Nike, whatever it may be. Now if I go to any chart and I'm gonna make it that box, that is now the same box relative on every symbol. Check or hold.
Check.
So I'm gonna find the range box, highlight the time frame that I want. It automatically draws the high to the low. I'm gonna edit that box, right mouse click. I'm gonna set up the whatever color coding that I want and apply to all symbols. If you click the percent change, um, it shows you what that range from highest high to lowest low is. Right in there, 0.52.
Oh, okay.
And then you can make that box as thick or as not as you want. Okay.
All right. So then by putting it on the end of the day, it'll
Oh
just
yeah,
keep going.
yeah. So now if I go out to here, let me bring it over a little bit. Let me find it. I go to the daily bar. So
Tesla.
now what I did on this one, uh, this is past the last daily bar. So wherever I draw that, you gotta make it 1 bar wide. Right? Come on, dummy.
So this should be its own tab.
What do you
Like
mean?
duplicate the sniper.
Yeah, I'm using this. I just call this my sniper tab. This is one where I'm doing my primary work on.
Right.
And if you can make that box as wide as you want, but it'll always take the size, however far to the right I move it. It always
Right.
takes the size of the last bar. Now, this is the size of the daily bar because I'm on the daily time frame. If I went to weekly, it's still going to draw the box,
Gotcha.
but for the weekly, it's now tracking
I got you.
the weekly bar, right?
Yep.
Yeah. So that's how you do that. The range,
Okay.
and then that gives you what you want.
Thank
Okay.
you,
Since
sir.
Yeah, where you got it set up on the daily, right there, that chart right there. Now,
Yeah.
mine doesn't move. I set it up that way, but it won't move. It's now. Last time I checked, it's like like 3 or 4 days.
Oh well, yeah. Each day I have to drag it over one.
Oh, okay,
Oh
that's what
yeah.
I
So
want.
like, yeah. So what I did when I opened this up today,
Okay.
everything was like I had to move. I'm sorry. Yeah, I had to move 4 boxes.
Okay, that's who. Because I thought, like, God, he's got this thing going automatic. What's it?
Well, here's the thing. I only got to move that on one chart, so I go to the S&P
Uh-huh.
because that's the thing that I'm looking at first,
Right.
and I move all of those one. I see what you're
Okay.
doing now.
Gotcha.
So like,
Okay.
let me think.
Yeah.
So there's my boxes,
Right.
and then here's the 5 day.
Okay.
Right. So when I turned this on today, it all looked like this.
Right.
Right.
Okay.
And now it's blocking that last little
Yeah.
bar. So I move everything over one day.
Okay. So you're manually doing it every day. Okay.
And so
Got it.
so I go 1,
Uh-huh.
2, 3, 4. So now my 3 10-day boxes are moved.
Right.
The 30-day box is moved, and now my 150-day box is moved.
Mm-hmm.
And then I think I zeroed out so.
Okay.
Okay.
Sorry, I got to.
That's what we were trying to figure out. Okay. Thank you.
Yeah. So there's my daily box. Okay.
Yep.
Sounds good.
And then so that will automatically redraw those boxes relative to every symbol in the stack.
Gotcha.
Okay.
Thank you.
There you are.
Alrighty.
Hopefully that we still were recording that.
I'm gonna try. I'm gonna try and do a little bit of live